So the big talk in the finance community right now is Foot Locker stock, which is down 33% today. Just in one day, it is down 33%. Foot Locker stock as of right now is trading at 2010 lows. It hasn't been this low in terms of price, which is $15 a share, since 2010. You want to know what I was doing in 2010? I was a sophomore in high school. That's how long ago that was. Okay, let's go ahead and just kind of keep looking here. So the reason why Foot Locker stock is down is because of several reasons. They had just an absolutely miserable earnings, just awful all around the board. They didn't do anything good, nothing. Missed on EPS, missed on revenue, forward guidance, terrible. And they paused the dividend, which was huge for a company like this. You know, this type of company, they're known for their dividend. That's what people like. And, you know, you got a lot of dividend investors out here who invest in companies specifically for the dividend. And when you cut that dividend, they're like, yep, goodbye. We literally saw that same thing happen to Disney, and it's happened to other stocks that cut their dividend. In terms of the company itself, you had a lot of finance gurus out here, these fake gurus who basically told you that Foot Locker was a buy, it was a great stock, and unfortunately, had you listened to those people, you'd be down huge right now. You'd be crying because your investment account just probably isn't looking so hot. Now, the interesting part about Foot Locker to me is we've seen several things happen. A lot of these retailers have just been getting smoked. Macy's got smoked. Dick's Sporting Goods got smoked. And now Foot Locker got smoked. They all got smoked in their earnings. But what's interesting about this is when you look at the e-commerce platforms like Amazon or Alibaba, you know, companies like that, they did okay in their earnings. What does that tell you? Brick and mortar is, in my opinion, it's over with. Some people debate that. Some people don't agree because they argue, oh, well, I went to the mall and the parking lot was full, or there was a long line, or whatever. I disagree. I think the world is constantly moving towards e-commerce. People are lazy. Would you rather get your lazy butt up? And you got to think of the average person here. Would you rather get your lazy butt up and go to the mall and walk around and all that stuff? Or would you rather sit your lazy butt at home and watch the 5 different streaming services you got? Netflix, Hulu, Disney Plus, Paramount, and order online. Most people are ordering online. That is why Amazon is doing so well, because that is where the world is moving to. People are ordering their stuff online. They're not going out anymore. They're not going to Macy's. They're not going to Dick's Sporting Goods. They're not going to Foot Locker. Malls are closing. Malls are not getting the amount of traffic that they used to get. It just is what it is. Same thing with movie theaters. We all know this. Now, funny thing that I want to point out is one of our favorite investors, Jeremy Lefebvre, Foot Locker was one of his stocks. Jeremy talked about Foot Locker when it was like, $43 a share. So Jeremy made several videos where he talked about Foot Locker stock. As a matter of fact, I went back and I looked at Jeremy's, past videos. He was talking about Foot Locker stock back in 2020. Jeremy Lefebvre, Financial Education, was buying Foot Locker back in 2020, which, whatever, that was several years ago. He could have sold it. I don't know. But one thing I know for a fact is, and I have the videos right here, this entire year, Foot Locker was one of his most popular stocks that he talked about. He has been religiously buying Foot Locker and promoting it on his channel. So it's just, you just can't make this stuff up. Every time these fake gurus promote a stock, it always destroys people financially. Like, these guys have a knack for picking companies that just die. I don't know. They're just bad at picking stocks. And this also goes with my overall thesis, where I always tell you guys that the average person with common sense who doesn't have 8 freaking hours a day to look at stocks, you should just buy index funds. This is the reason why. Even the people who sit at home all day and pick stocks and are purportedly financial stock market experts can't even get it right. I mean, how many stocks has Jeremy picked that have gone to zero? A bunch. How many stocks have Jeremy picked that have gone down, plunged 30% in one day? Jeremy has picked a bunch. So anyway, you got this video right here. 7 stocks I'm buying now, March 2023. Jeremy literally talked about Foot Locker. Matter of fact, I'll play a little bit of the video. Here we go.
Up here is Foot Locker. This one serves as a dividend stock. By the way, Shopify, if you didn't know, served as a growth stock. I'm pretty sure everybody knows that, okay? This one serves a purpose of a dividend stock. The interesting thing about Foot Locker is it's kind of needs in one space, since they sell, they sell clothing and they sell shoes, right? It's kind of needs in, it's wants based. Because you go there if you need shoes, but
I just want to make it clear, nobody buys clothes from Foot Locker. Like, come on, dude. Nobody. I've never in my life bought a piece of clothing from Foot Locker. Nobody buys clothes. Everybody goes there for the shoes or the flip-flops or the backpacks or something. Nobody buys nobody buys clothes. Anyway, so yeah, March 2023, he made a video. January 2023, he made a video talking about Foot Locker. And I even found a video as early as August. This is his video from August and his famous 5 stocks I'm buying now. Jeremy literally said, Foot Locker is a buy. Here we go.
Is Foot Locker stock. Ticker symbol on this one is FL. This one's had a horrible past 5 years. The stock's down 46% in the past 5 years. Awful, okay? But I'm here to say I'm a huge believer in this Foot Locker story, and I am actively buying shares right now, and I'm probably not going to stop buying this one anytime soon, okay? Now, when it comes to Foot Locker,
so there you go. You heard it from him. No stock analysis, just, oh, I believe in the story. And you got to be very careful with story investors. There's a lot of them on YouTube. They don't do any real financial analysis, no evaluations, never look at the financials. I have never in my life seen Jeremy Lefebvre look at the financials of a stock. Never seen it. Never, ever seen him do it. And honestly, if you looked at Foot Locker's previous earnings, you honestly would have kind of been able to see this coming. I'm just being honest here. The way that they were talking in their last earnings, you kind of would have been able to figure out that, yeah, it's going to take them a little bit of time to turn this around, even if they're ever able to turn this around, you know? So for me, I just feel like you got to be very careful with these fake stock gurus who just don't know what they're talking about. Otherwise, you're going to get murder she wrote in your stock portfolios. And that's literally what we're seeing. So not only did Jeremy Lefebvre talk about Foot Locker, but you also had another very popular investor in the finance community. His name is Jim Cramer. In March, around the same time where Jeremy made his video saying that you should buy Foot Locker. By the way, Foot Locker was like $34 a share back when Jim Cramer said this. Jim Cramer said, UBS says sell Foot Locker. If you do this, please remember to invite me to your funeral. Well, the inverse Cramer tracker guy is already on it. He posted the fact that Foot Locker is down 45% within the last 6 months, and obviously it's down 33% today. So again, Jim Cramer is another fake guru. I mean, obviously he's on TV. He has a huge following. You know, he's got a lot of whatever. People like him, whatever. But unfortunately, had you listened to Jim Cramer, which a lot of people take these guys' stock recommendations and they buy stocks based on it, you would have been absolutely destroyed, which is why I continuously say on this channel, you got to stop listening to these fake gurus. They are going to destroy you every single time. And then here's the video of Jim Cramer basically saying he was wrong. He literally said this today on CNBC. Let's go ahead and check that out.
Below $2 billion. I mean, it's a small company. Jim, you said it's been a mistake. You know, you're getting a lot of heat. It always happens to you because you've been positive on the stock.
I've made a mistake. I mean, that's what happens.
What do you do here, though? When you're down, when you're looking, you know, obviously, all right, you made a mistake. It happens. We always talk about the fact that, hey, you get some right, you get a lot right.
For
you
me,
get some
I got
wrong.
a travel trust. I mean, you know, at the end of the year, if this stock's still there, I'll take the loss. It's been horrendous. I bought stock when she bought stock. She came on Mad Money.
Okay, I'm sorry. I had to pause the video because the anchor literally said, you know, Jim Cramer, you've mostly been right about. No, he hasn't. Matter of fact, Jim Cramer is so bad at picking stocks that some dude made an inverse Jim Cramer ETF. Like, that is a real ETF. You could literally look that up. It is an ETF that some dude created where basically every pick that Jim Cramer talks about, that guy shorts it and he makes money from it. And there's literally an ETF. Like, Jim Cramer is not a good stock picker at all. He's terrible. And I'll let you guys in on a little secret. Well, it's not really a secret. It's just factual. But most of these Wall Street guys are not good stock pickers. They're not. They just trick you. The entire Wall Street game is you create a hedge fund or some type of investment firm, you get a bunch of clients, you tell them you're going to make the money, and then you charge a expense ratio or some type of fee, and that's where these guys really make their money. They don't make money from stock picking. They make money from the fees that they charge. Jim Cramer doesn't make money from his travel trust fund or whatever. Jim Cramer charges an annual fee in order to get access to his travel trust fund. If you want to see what stocks he's buying, you have to pay like $400 a year, or something like crazy like that. I think it's even more expensive than that in order to get access to it. You want to see what Ross Gerber is buying? You have to pay for that. You know what I mean? Like, it's not as simple as these people make it. Like, unless you're Warren Buffett, very few people out here are able to pick stocks individually and make a lot of money. I mean, look at some of the stock picks that these guys talk about and look at where they are now. Stock picking is so ridiculously hard, and that's what retail investors need to understand. Unless you have a finance background or you have the time to really look into this stuff, you really shouldn't do it, okay? So anyway, that's really all I got to say. Foot Locker, another one bites the dust. Stop listening to these fake gurus. Learn how to do this yourself. And if you don't have time to learn how to do this yourself, buy index funds, okay? Anyway, that'll go ahead and conclude today's video. Thank you guys so much for watching, and I will see you guys in the next one.